Welcome to the Brent Bruce Daily, where each day we take a look and see where home loan interest rates really are, what is making them move, and what to expect for the future. Right now, it is Friday, the 24th of March. It is already 4:34 p.m. Central Time. The bond market mortgage-backed securities are closed for the day. So let's take a look and see because it is eerily quiet, just an eerily quiet day after all the news that we've been hearing about. Take a look at what's going on here. The 10-year Treasury is only down 1. Mortgage-backed security is up 11. The overall stock market was pretty stable today. I mean, this is up, 132, 22, 36. So, I mean, everything looks pretty good. Everything's moving in the right direction with the stock market up, the MBS up, and the 10-year Treasury down, but just kind of subdued. Everything was minor, right? But check this out. This is the big win of the week. Look at the big win of the week, starting here and rolling all the way up, breaking through Fibonacci's, and we are closing this week above the 200-day moving average. Let's open this up to a year chart, guys. Okay, a year ago, we touched the 200-day moving average one time back in February. We talked a lot about that, but for a year, we have not been anywhere near the 200-day moving average. Let's open this up to 2 years, and let's see the last time that we were battling with the 200-day moving average. Let me get out of the way here. It was back November of 2021 before we were battling with the 200-day moving average. Really, I guess we'd have to go all the way back here to, yeah, still November of 2021. And look at how long. This is when the way that these moving averages work is that when you're closing the days and you're pulling down on this big long rope. It's a long rope, and each of these ropes, this is the stiffest rope. It's the most difficult to pull down. Then you come to the 100-day, the 50-day, the 25-day. And the shorter the term, the flimsier the rope is. See, it's easier for this rope to move around and be shifted by what's happened most recently because it's over a shorter period of time. These longer ropes are difficult to bend. You really have to have a lot of weight, a long haul down to get it to bend. And it has been all the way back since November of 2021 that we have been fighting with the 200-day moving average. And we're not fighting with it at this point. We are above it. We got above it yesterday, and now we are closing above it. I don't know about you, but that to me is a really good indicator that maybe we are finally hitting the trough of the MBS and we're going to start coming up consistently for a run back to where we need to be, back to the expectations of 4.875% by July the 31st, which is still a possibility. So, where are we right now on our home loan interest rates with that good news of the day? Let's jump in here and get started. Unfortunately, I don't have it open here. All right. So we are, again, this is the Brent Bruce Daily, the very well qualified 30-year fixed conventional home loan. We were at what, 6.375 with a little bit of a cost yesterday. Let's go ahead and run this. And I think that you're going to be pleasantly surprised because overall it looks like the banks might be giving us a little bit of those profits. We are at 6.125 with a little bit of a credit, $176. Let's open this up here. And you can see that I mean, this bank here, Flagstar, wants 0.4 to get to 6.0. I think we can do better than that, getting to that 5.9. And let's take a look at United. 5.99% is costing 0.163. $587. What does that really mean, guys? That means that anybody who calls me and is a very well qualified 30-year fixed conventional buyer, I'm going to say, look, your rate is 5.999% today. That is the rate. Yes, it's going to cost you $537, but it's not going to cost you $5,370, right? We are so close now that that is the rate that a customer is going to take. I can't say it's with no points because it's 0.162, but you can see how close we are. We're back to the fives, guys. And we are above the 200-day moving average And if we can stay above it, let's think about it. If we close next week above the 200-day moving average, that is now a very strong floor of support underneath us, and we can really feel that we are turning the tide and that very stiff rope of that 200-day moving average over time, and it's going to take a long time. It will start to bend back up, and we will now start to be in a upward trend like we were years ago as we had the great run that we had with home loan interest rates in the 2s and 3s for such a very long time. Great news. I want to make sure that you understand why it's great news and the fact that we got above the 200-day moving average, which has not happened since November of 2021. It's a good day. Celebrate the weekend. I'll talk to you again on Monday. Make sure that you like, subscribe, and share. We'll talk to you then.